Joining us now to discuss all of that and more. Very pleased to be able to welcome Dan Pickering. He is the CIO at Pickering Energy Partners. Dan, thanks so much for being here. I'm almost at a loss to decide what I want to ask you first. So I'm going to start with some of the commentary surrounding the SPR, because we've talked a lot about the geopol. But so Secretary Granholm is saying they're going to try and refill it to the previous levels by the end of this year. But then Hess is saying, hold on a minute, do it faster because there's energy security risks involved. But they're paying so much more than they would have paid before. So how does this play into, I suppose, pricing in your mind at all, if it does?
Yeah, well, so the energy secretary said we're going to refill to levels that we would have seen otherwise. There's only about 40 million barrels that have come back in. Remember, we sold 180 here in the U.S. As we drew down the SPR. And so there's a long way to go. Call it 140 million barrels. Certainly paying more than they would have if they'd have done this earlier in the year or last year, but I think the reality is this will be a slow and steady thing. I don't think the administration feels the same urgency that perhaps the industry or crude traders do. And so, I think we'll see a steady add at whatever price that turns out to be. Will it wind up being a net good trade for the U.S.? We'll see. But strategic reserves at these levels feel a little bit low.
But what does that mean in terms of your own price expectations? Because this is just further fuel to the fire in terms of establishing a pretty solid floor that you can then build on top of. And when you think about what's happening in terms of Russian supply getting knocked out left, right and centre by those Ukrainian drones, and you think about what's happening in the Red Sea, you think about Iraq now saying that we're going to be complying with OPEC, are we getting closer to a case for $100 oil?
I wouldn't say 100's in the gun sights here anytime in the near future. And the reason I say that is OPEC still has 3+ million barrels a day of physical capacity off the market. I think if price continues to move up, we're going to see more discussion of either OPEC cheating or perhaps a relaxation of those production cuts. So I think that the geopolitical risk, the demand side of the equation has improved, if you will, for oil prices over the last 2 or 3 months, but we still have this big overhang of OPEC excess capacity. So I think talk of $100 oil is definitely premature. If it gets that high, you'll hear about cheating. You'll hear about demand destruction.
Right. What about nat gas, Dan? Because you're, of course, calling 2024 a lost year for the commodity.
Yeah, natural gas. So the expectation in the U.S. was that LNG projects were coming quickly, that the export demand would really help boost price. The reality is it was a warm winter here in the U.S., and then the big Exxon Golden Pass project moved from late 24 into 25. So you lost 2 pieces of demand. Gas markets sort of gave up on that. We're now at about $1.75 in MMBTU. You need those prices in the 3+ range to really feel better about the gas markets. And so with the amount of gas storage we have here because of that warm winter, it looks to me like price is really going to struggle until we get to, either those exports or next winter. So call it 6 months of treading water and pretty mediocre pricing.